Well, the dance for supermarket bosses these days is to sound poor to customers but prosperous to investors. Woolworths' Brad Banducci didn't quite pull that off last week, but Leah Weckert of Coles was in sackcloth and ashes to report Coles' result today. Profit fell 3.6% to $594 million for the half year, and she moaned that they have to work hard every day to get customers into the stores and only make a measly $2.60 for every $100 spent, which is the same as usual. The verdict of customers will have to wait, but investors gave her a 5.5% round of applause. Most other moves on the market were small, and the market itself closed 0.2% higher. That followed a fall in New York last night and in most Asian markets today. The Aussie dollar stayed in the mid-65s, iron ore dropped 5% and cocoa kept frothing higher. Bitcoin hit $55,000 today for the first time in 2 years, ahead of next month's halving. That's where Bitcoin miners get half as many Bitcoins for the expenditure of a given amount of computing power and electricity. It was pre-programmed to happen every 4 years when the cryptocurrency was invented in 2008, so it keeps getting scarcer. The halving on April the 19th will be the 4th, and the price has always gone for a decent run before and after every halving. Finally, Roy Morgan put out its quarterly survey of mortgage stress today, and the number of mortgage borrowers at risk has hit 1.6 million, a record high. Now, the percentage is a bit lower than the GFC, but there are more people with mortgages now. And the number of borrowers extremely at risk is nudging 1 million. And that's finance.